James Hay. He's principal and founder of Pangolin Investment Management. James, thank you very much indeed for joining us. Well, right now, how badly hit do you think industry is going to be, particularly through the supply chain there in Thailand?
Well, it's clearly a problem. We actually only own one stock in Thailand. It's a food manufacturer and distributor. In one way, it's quite good for them in that everything's flown off the shelves because people have been stocking up, but obviously their distribution is affected. And clearly we're hoping that their factories, which so far are fine, are going to remain that way. But distribution's a big problem.
Well, you know, there are other countries which could actually benefit from another's misery, and I'm talking about Malaysia here as well. Do you see that happening?
Yeah, clearly. A couple of weeks ago, the Japanese ambassador to Malaysia was talking about how many Japanese manufacturers are looking to manufacture outside of Japan following the earthquake. I think some of them are using it as an excuse to lower cost rather than rebuilding. Malaysia is clearly a destination for manufacturing, and whereas Thailand has been attracting a lot of FDI, a lot of people will be thinking twice about that, and Malaysia's infrastructure is pretty good, and touch wood, we haven't had any floods of a serious nature here for a while, not affecting industrial production.
Okay, I mean, you've been in Malaysia for a long time now, and it's your biggest, well, it's your biggest weighting by geography anyway. I think you've got, what, 36% of your funds invested there. What makes you such a fan of Malaysia? As a place to live, it's a very nice place to live. As a place to invest, this is a very neglected market. It's very under-owned. Foreign ownership levels are bumping along fairly close to their lows, certainly since the Asian financial crisis. And therefore valuations are cheap because there just aren't people looking. And our method of investing is generally we try and look where other people aren't looking, because that's where one finds the bargains. So we think there are a lot of very clearly undervalued stocks in this country. So we're putting more money into Malaysia at the moment. That's where our new money's going. Okay, valuations as well, looking pretty healthy there. So where are you investing exactly, typically? Well, typically we like consumer stocks, and we prefer companies which have net cash. Malaysia's got a fairly fast population growth rate. It's growing at about 1.7% a year. It has a very young population, and people are getting richer and disposable income is rising. So playing, pretty much one of the things we do with our fund is to try and play the Asian consumer, and we need to do that at the right price, and we're finding it pretty easy to do that in Malaysia at the right price. Yeah, I mean, your second biggest holding, geographically speaking, is Indonesia. Now, that's got all sorts of infrastructure problems, but again, it is a domestically driven economy here, so it's the same sort of story for you. Yeah, we've actually been selling Indonesia probably now for the last 18 months or so. We bought a lot of stocks there at the end of 2008, beginning of 2009. The consumption story is very strong, but actually finding companies that are attractively priced, in which one feels very comfortable with the management, because we tend to be long-term holders, is getting increasingly difficult in Indonesia. So we've really been selling that market for quite a while, and we've been investing elsewhere. And that's why, at one point, our Indonesian weighting was about 75% of the fund. It's now slightly smaller than Malaysia, and I expect that trend to continue as we invest more into Malaysia. James, thank you so much for joining us. James Hay there from Pangolin Investment.